I want to have this conversation because I notice people like Ray Dalio, Eric Weinstein, people trying to speculate about the future of money. But during these speculations, they always refer back to a kind of very familiar definition of money, which is money as a medium of exchange. And, these are smart people, but I'm curious, do you think this is a correct definition? And if not, what is it missing?
Well, money, of course, is a medium of exchange. The three big things that you hear are medium of exchange, unit of account, and store of value. Like those are the big three functions of money.
Mm-hmm.
And I think it's a little bit weird to define money in terms of three things because money is one thing, and those three things are all kind of properties of money. So it's not incorrect to say that they're properties of money. But I would say that I like to define money in terms of what its function is. And markets require a common standard of value in which to set prices, and then people need tokens of value in order to pay those prices. So this is the stuff we call money and currency. Money is the economy's standard of value. So I would say that is like the primary core definition of money. And then the other things all kind of fall from that. So it's a medium of exchange because if you want a standard medium of exchange, that people generally use as the default, you want it to have a standard value. So that's why it kind of becomes the medium of exchange. You could, if you wanted to, you could make a payment. Like if I owe you, $1 million or something like that, I don't have to make that payment in money per se. If you and I agree that I give you something that's, in total worth $1 million, then we've settled that debt. We've made that payment. So, having it be the medium of exchange or means of payment is not like the most fundamental thing. You can use other things for that, but you usually want to use money because money is the standard.
Gotcha. One thing I read that stuck in my head in talk about this question of what is money was what C.H. Douglas wrote about it when he was saying that, money as a means of exchange wasn't quite right. Like he came up with this analogy of money as a ticket system. And I know you've used the ticket analogy, like the airplanes, tickets and seats. Like do you think there's advantages or disadvantages to that approach? What do you think he was getting at when he said that?
Well, I think the important thing, the important point that makes is that what matters is spending. What matters is how much buying people are doing. A lot of times people are focused on kind of like how much money there is in existence, and they think that that's what's going to determine prices or something like that. But it's really whether you're spending it, whether you're actually claiming goods and services from the economy. Like at the beginning, I was saying, the money has to be flowing into the productive sector and goods and services are flowing in the other direction. If someone's just sitting on a pile of money, it doesn't really matter. They're not kind of claiming the goods and services. You can think of that as a claiming action. The money is flowing in, claiming the goods and services which flow back. So I like that analogy. I think at the most fundamental level, it's the standard of value is the most important thing. And then the fact that you have these tokens that can be used to claim production from the economy is, you would generally want those tokens to be of a standard value, of the standard money value. But like I was saying, I could, if we agreed, I could claim something from you using something non-standard as long as we both agreed to it.
Mm-hmm. Is it almost like there's two entities, the money itself and then the value and then the tokens which represent that? Or is that too crude?
No. I think that's exactly right. There's the standard of value, and then there's the standard value tokens that we actually pass back and forth.
Mm-hmm. What's the relationship between money and debt? I've heard David Graeber say things like money is debt. Do you agree with that?
Yes. Money is debt. I would say all money is debt, not all debt is money. Because again, money is, in terms of the money tokens, like the things we trade, like all of that stuff is a form of debt in a sense. So I guess the way to kind of, I mean, people tend to think of gold as like this ideal form of money or something like that. But really, the value of money its standard value is being backed by institutions. It's being backed by a promise that's being made by institutions. And that's true even when you're using gold as money. It's true when you're using kind of commodities as money. Maybe it's less obvious, it's less clear, but there is kind of a trust in society that these things that we're using as our standard are going to maintain kind of a consistent value from day to day, that kind of thing. Even if we're using, beads or shells or, gold coins or whatever, there is some kind of implicit promise there that these are things we can trust to maintain that standard value.
Would you say, I know that one of your favorite economists is Perry Mehrling, and do you think he has a similar definition and sense of money that you do?
Well, I would say that well, first of all, I want to say I often have a hard time citing economists because I never 100% agree with them. But Perry Mehrling probably gets the closest. And I wouldn't say that my definition of money is different from his. I'd say perhaps that I emphasize different things. So like I was saying, I tend to define money based on what its function is. Markets need a standard of value. And I don't think Perry Mehrling would disagree with that. But I focus on money being an emergent property of markets. You can't have large scale markets without money, that kind of thing. But he really likes to emphasize the hierarchy of money and credit. So the idea that when you have a bank deposit, that's a promise from the bank to pay you some higher form of money. So it's a promise to pay you cash if you want to withdraw that money. But depending on which levels of the hierarchy you're kind of sitting at, different things can feel like money. Like you and I, we feel like if we have money in the bank, if we have bank deposits, that is money, right? It's not just a promise to give us money if we withdraw it. And we even transact in terms of bank deposits. So I would say Perry Mehrling focuses more on kind of the mechanics of money at one level of the system is credit at another level of the system, and kind of looks at those mechanics, the mechanics of banking, how money is created, how the payment systems work, how the payment system works, how payments are made, that kind of stuff. But I wouldn't say that he and I disagree about kind of what the definition of money is.
He frequently says all money is a swap of IOUs. What does it mean to swap an IOU?
Yeah, so he doesn't say all money is a swap of IOUs. He says all banking is a swap of IOUs.
Okay.
So I guess the classic example is you take a loan out from the bank, and when you do that, you're saying to the bank, "I owe you $10,000 in 5 years," or something like that. But the bank is also saying, "I owe you $10,000 right now," because it's creating $10,000 worth of bank deposits. So you've swapped IOUs. You both, when you borrow money from the bank, you both owe each other $10,000. Or if you borrow $10,000, you both owe each other $10,000. And the term to maturity is different. And then the quality of the credit is different. So the bank's liabilities are the deposits. We use deposits as money. And the reason we can use them as tokens, as a means of payment, is because everybody trusts that the bank is good for that debt. The bank is going to make good on those deposits. So if I go to you, Derek, and I say, "Hey, I'm going to give you $500 in bank deposits," you're like, "Okay, sure, that's money," because the bank is gonna pay you. If someone comes to you and says, "Here, I'm going to pay you $500 in IOUs from Alex Howlett," you'll be like, "Wait a minute, who is this Alex Howlett guy? How do I know he's going to give me $500? So when I would say that debt or credit becomes money when it's so widely trusted that a a promise from a bank is just as good to one person as it is to another person, and then it's also denominated in these standard currency units. So then we can kind of treat it as equivalent to money, and then kind of the distinction evaporates in most people's consciousness in most contexts.
Do you think you need a bank in order for that to happen, that magic moment to occur when money does become so widely trusted? Are there examples of this happening without a bank?
Yeah, I mean, it depends on how tightly we want to define the term bank. Like I was talking about using beads or shells or gold coins as money or something like that. And then in that case, you can ask the question, okay, well, who's the bank? And I think in those cases, it's the gold coin is not an explicit promise from a bank to give you X amount of standard units of something. The gold itself is the standard unit. But there's still usually something going on with institutions behind the scenes managing the flow of gold in the economy. And often what happens is that there's, people usually aren't actually paying each other in gold. It's more like they're paying each other in promises to pay gold. So there's always a credit structure on top of what your base unit of money is, and the size of that credit structure, the amount of spending that's happening, the amount of flow of spending, flow of credit money in the system is part of what helps keep, it's part of what helps keep the currency unit's value stable, keeping those flows modulated to the right levels, that kind of thing. So, obviously, there have been times and places in history when we were worse at maintaining the standard value, and times when we have been better. So yeah, I guess that's kind of a long-winded answer, but yeah.
Okay, I think I follow. What is the relationship between debt, money, and giving and gifts? I've read a lot about gift economies, and it's clear that debt, something is given and you owe something back. A gift, of course, you give it freely, and then there is no necessary exchange that is paid back, of course. So when you give someone money, that may not create a debt relationship there, but the money, I suppose, is standing in for some other exchange that's going to happen down the road.
So if you're just giving someone money, that's just like a regular gift, right? You're just handing them these tokens that can be exchanged for other things. So that there's no distinction there. But when we talk about debt and we talk about like paying for something, that's kind of like more of a two-way transaction. Obviously, if everyone just of their own free will decides to give everyone else all the things they want and need, then you don't need money. Money is for helping facilitate trade. It's when people want to trade with each other. So money is an abstraction that allows trade to be efficient, because now all trade is happening in terms of this common standard. If people aren't trading, if they're just giving each other stuff all the time, then you don't need it. But I don't know that you could have any kind of large scale economy where people wouldn't want to trade with each other.
What do you think is, people tell stories about kind of where money comes from, like what is the origin of money? And people will say like, well, people used to trade, cows for chickens or something. And then it just became easier to do that by replacing it with money. Is that an accurate story? What do you think it was the likely origin point of kind of what we would think of as monetary systems today?
So I think it both is and isn't an accurate story. I don't think there was ever a time or place in history where there was an economy that was based on barter trade, like people trading hammers for cows or whatever. That has never existed. But in terms of the problem that money solves, I think that story tells an accurate story of the problem that money solves. And economists maybe call this the double coincidence of wants. Like you happen to have like the right number of hammers to trade for this cow, and you want the thing that the other person has, and that kind of thing. That's correct. That's the problem that money solves. It provides this common standard, this kind of agreed upon language in terms of which we trade everything else. It's like a medium of exchange is not possible. Like a standard medium of exchange is not possible unless you have a standard unit of value. So I would say that money emerged as markets emerged. There was never such a thing as barter, but you can imagine barter as this absurd kind of counterexample to what we're doing now. Absurd in the sense that it could never really work. So yeah, I guess that's what I would say.
I got you. Some people emphasize the state a lot more when they talk about the origin point of money. And I think one way I heard, like David Graeber put it recently, was that, you can imagine that the government mints coins in order to pay soldiers. And then how do they get value to those coins? Well, at the same time, they tax a bunch of the townspeople, saying you owe a certain amount of coins back to the state. And so, well, who has the coins? The soldiers. So if the townspeople start producing goods and services in exchange for the coins, then they can meet this obligation by the government. That's sort of a very different way of talking about the origin of monetary systems. What do you think of that perspective?
Yeah. So you could have different stories of kind of like the origin of money and kind of how it comes about. And that's certainly a valid one. And I guess the question, there's kind of, you can break this into two questions. There's the question of how does money gain its initial value? And then there's the question of how does money maintain its stable value? Because it needs to be this stable unit, right? And fundamentally, in order for money to have value, people need to know that they can trade it for something. So being able to extinguish tax liabilities is certainly one of those things. I know I can pay my taxes with it, therefore it has value. But I wouldn't go so far to say that if the government creates a unit and says you have to pay taxes in this unit, that thing automatically becomes money, right? Because we could have a currency, we could have a standard currency in our economy, and then the government is over here doing this weird thing saying you need to pay like, taxes in chocolate or something like that. Then whenever you need to pay your taxes, you'll just buy up the right amount of chocolate and pay the taxes, that kind of thing. Like it doesn't turn chocolate into money, right? So the government, in order to make something money, or in order to maintain something's use as money, it has to be about more than just taxes. They have to be somehow using their institutions, ensuring that money has a standard value in terms of the things that people ordinarily buy. So consumer goods. So if the government modulates the flow of a certain commodity so that people always value it at a standard price relative to ordinary consumer goods, now you're on track to having something that's actually money. Just taxing in a unit is not going to make it money. So this is something that the MMT people talk about a lot. And Warren Mosler has a story about how he's giving a talk and he has some business cards, and he says, if you do these chores to help like pick up the chairs or clean up the auditorium, then you will earn some business cards. And people are like, oh, I don't care, why does that matter? And then he's like, oh, by the way, this guy standing at the door with a gun is not going to let you leave unless you hand him one of these business cards. And it's like, oh yeah, now we need the business cards. But that doesn't make it money. That doesn't make it a standard unit of value in terms of consumer goods. And if I'm in the audience, maybe I want, Bob over there to do my chores for me, so I can pay him $20 and get one of the business cards and leave. And then I didn't have to do any work, and I wasn't using the business card as money. I was using the money as money to buy a business card, which just happened to be a voucher for the thing I needed in that moment to kind of pay the tax.
Would you say that regardless of whether the initial bootstrapping of value to the currency occurs in a state-led or market-led fashion, that are you erring on the side that to become money and stay money, it needs to function in the market sector? It can't just be the state ordering people to value it.
Right. That's exactly right. It can't just be the state ordering people to value it, and it can't just be the state saying, "Hey, you have to pay taxes in this unit." Okay. It has to be more than that. And generally, what you see in the real world, what you see historically, is that the way money emerges is that it's kind of this organic process where people are already using something as a standard of value, and then maybe the government comes in and starts backstopping that standard of value in some way, or starts issuing liabilities that are backed by a reserve of gold, for example, And then, now the government's IOUs for gold become kind of just as good as gold, kind of like how your bank deposits become just as good as the cash you could withdraw if you wanted to, that kind of thing. So you don't see money just kind of like come out of nowhere as a new thing. It's always based on kind of like some previous standard of value, which makes sense, of course, because, in order for money to be money, it has to be anchored to the value of consumer goods anyway. So, if you go all the way to the bottom, at least, it's got to be somehow connected to prices of consumer goods.
What do you think then really marks the difference between the state and the private sector, the public and the private sector, in terms of its relationship to money? I mean, is there a fundamental difference, or are states basically large banks? I mean, how do you frame it?
Yeah, I mean, I think I like what you said. States are basically large banks. I think that's a good way of thinking about it. I think there's a quantitative difference, and there's somewhat of a qualitative difference as well. So the quantitative difference is just that the more people trust the liabilities of an institution, the more you're going to start seeing those institutions' liabilities be used as standard currency. Kind of like what we were talking about earlier, that we all trust the liabilities of banks, so we use the bank's liabilities as currency. And then the qualitative difference, and this is something MMT people talk about too, is the distinction between a currency user and a currency issuer. So once you get trusted enough, and people start using your liabilities as money, now you've become a currency issuer. In order to stay a currency issuer, you have to be able to maintain that trust. You have to have your institutions maintaining the standard value of the currency, right? There's a little bit of wiggle room, like we've certainly seen people stay on currencies after they've gone very inflationary or very deflationary or something like that. But there's a limit to how far you can go with that. There's governments are often in a position of power, so there are things they can do extra that maybe a really powerful bank on its own wouldn't be able to do, like having a military, being able to set the laws and threat of violence and all of that. But if you're not managing your currency properly, the markets are going to find something else to use as currency. So when MMT people talk about the distinction between currency users and currency issuers, they're often emphasizing like the sovereign power of the government and that kind of thing. But the question, like that they're sometimes not asking as much is what gives the government that sovereign power, or the monetary sovereignty? Like what earned them that? How are they establishing that, and how are they maintaining that? And that comes back down to the trust of the promise, that the trust behind the promise that's being made. That the currency is going to be stable, and that's more on a continuum with banks, small governments, large governments. Like it's not this like stark dividing line between currency user and currency issuer.
So is a bank a currency issuer? Is it more a currency issuer or more a currency user in your view?
So it's both, depending on where you want to draw the line between money and credit, right? So it's a currency user on one level of the hierarchy, and it's a currency issuer on another level of the hierarchy. A bank is certainly, not at the top of the hierarchy. One thing that's kind of maybe a little more special about the central bank is that they're issuing the ultimate liability with respect to a particular standard unit of value. And then, like the United States central bank, our currency is so powerful that you can think of it as the top of the world currency hierarchy. And then other central banks are somewhat free-floating, somewhat independent, but some of them are very much pegged to the United States central bank. So there's hierarchies kind of in all directions. And it doesn't have to always stay at the top of the hierarchy either. They have to be managing the currency correctly in order to maintain that position at the top.
Okay, got you.
Yeah.
So this brings to mind then, if we're talking about basic income, and specifically being in a world where there is no basic income, and we would like to be in a world where there is one, it seems that there's two basic roads we could take to do this. One would be to use working through existing political institutions to try to formally alter the use of fiat currency to have to allow for a basic income, to do it through the political system, do it through the state. Another route would be through some kind of alternative currency, digital currency, or in some otherwise in the private sector. What are the advantages and disadvantages of these two different roads to basic income?
Yeah, I mean, so the idea of an alternative or complementary currency is a little bit weird if you think about it, because currency itself is a common standard that everyone agrees on. So if there's, it's like we're all speaking English here, and then there's some guy over here speaking an alternative language, right? It's like he can't really be part of the conversation. So in order for currencies to work together, they have to kind of all be part of the same system. In some way, they have to be connected to each other. So in terms of, I would say the main advantage of implementing basic income through something like a complementary currency is that you don't have to wait for the government to do it. You're not constrained as much by politics, but you still have this problem of how do you ensure that your currency is a currency? How do you ensure that it has value? How do you ensure that it has stable standard value? Or if you're paying out in something that you wouldn't think of as a currency, how do you ensure that the asset that you're paying people has value, has a reliable value, so the basic income payout is worth roughly the same amount each time people get it, and that kind of thing. I used to actually be skeptical that we could even get basic income through traditional advocacy and politics, that we get the government to do that. But now here comes Andrew Yang, so who knows, right? I would say that it can also be hard because I think a lot of times when people talk about complementary currency, whether it be cryptocurrency or local script or whatever, the people talking about it don't necessarily understand how money works well enough to be able to create something that could be a currency. Like
right.
they might be doing the Warren Mosler thing where, okay, now these particular vouchers have value because you need them for something or something like that. But you still haven't made the jump or crossed the threshold into becoming money or currency.
Right. Yeah. And we'll talk about that. I guess, correct me if I'm wrong. I mean, the way I sort of look at it is that because the state does have this kind of monopoly on the currency, if there's a way to do it through that, it's a good shortcut. You already have a lot of. It's not so much the state has a monopoly on it, but that it is the monopoly currency. It is the popular system. It's like everybody using YouTube or Facebook. They're already there. So if you could find a way to use that currency to implement a basic income, it's way more efficient. You get to skip the whole process of bootstrapping value to a new currency. So that's advantageous. But if there's an opportunity to do that, and clearly Yang is an opportunity to do that, or at least raise awareness about that, we should be all for it. But then, like at that point, does the alternative current, or does the complementary currency route become like the backup plan? Like if that is not working or is not going so well, that we have another option we don't have to give up. There's another card in the deck.
Yeah, I mean, I would say generally speaking that it's hard to design a monetary system that competes with the US dollar without understanding what the dollar gets right and what the dollar gets wrong. So you can't beat the dollar without being better than the dollar. And part of that is that it's already entrenched and established. But part of that is that it's being managed really well. It's a really stable unit, and people, why would we switch to anything else from the dollar? So you have to be providing an alternative that's better that people will switch to. So I would say that the alternative currency route is never going to work unless you understand what you're providing that's better than the dollar. You're fixing some kind of deficiency in the existing fiat currency systems. And I think basic income can be that thing. But I also think if you look, so I know I like to rag on cryptocurrencies, but if you look at kind of the various alternative currencies out there and cryptocurrencies and stuff like that, they haven't even solved the problems that the dollar has already solved. They're not even getting the stuff right that the dollar gets right. So yeah, I mean, like, I think, I designed system for bootstrapping a new currency off the dollar and implementing basic income called Project Gresham. And the idea with that was that if the government doesn't do it, I can do it better. Or not I can do it better, but if the government doesn't do it, I can do it. There's a path there. But in order to see that path, I had to understand how the dollar works and why it's good and what it's missing.
Yeah. What is Project Gresham? I mean, how would you describe it in simple terms?
It is a new fiat currency system that's bootstrapped off the US dollar for the purpose of implementing basic income.
Nice. And so what is the process of, how does it work? I mean, what unique problems does it solve, and how does it go about meeting the challenges of getting value to a new basic income currency?
Getting value to a new basic income currency. So remember before when I was talking about how currencies typically evolve organically based on existing standards of value? Mm-hmm. So that's kind of the key to how the Gresham system works. In much the same way that the US dollar used to be backed by a reserve of gold, the Gresham system is going to be backed by a reserve of US dollars. In fact, when we first launched, the idea is that people are only thinking in terms of dollars, that, like everything's denominated in dollars, and people just see it as a PayPal-like payment system with a built-in basic income. So in order for that to work, I guess, the question you're asking is, how do you make it happen? We have to get a reserve of US dollars. So we have to raise a lot of money and be able to maintain that reserve as the system grows.
Because it's relying on US dollars. I mean, is there a sense in which, because of you, when I think about economies now, I'm thinking a lot about kind of tying the flow of currency to the productive capacity available. Is there any sense in which you sort of have to worry about that with Gresham? Like, are you thinking in terms of like adding producers to that will accept it in the network, or do you bypass that because it's tied directly to the US dollar?
You can't bypass that. Even PayPal can't bypass that. PayPal can't exist unless there are people willing to accept PayPal as payment. And this is the same as like credit cards. You can't have an American Express card if there's no merchants that aren't willing to take American Express, right?
Right.
So certainly that's an important part of Gresham, is getting merchants on board, signing them up so that they accept Gresham payments.
Well, yeah, you have to get merchants who accept it. And then my question is, like, because you're talking about delivering a basic income through this system. And so Is there a way in which basically you are calibrating the amount that's handed out based off of the merchants who accept it? Is that what's going on?
Yeah. So no.
Okay.
There's a few different phases of this process. So in the first phase, we are pegged to the United States dollar. We're not worried about doing our own monetary policy. The basic income we hand out is very small, and the goal is to expand to as many people as possible, eventually getting to be worldwide. And then the next phase, or further on, we are going to be not pegged to the United States dollar anymore. And then we have to have our own institutions. We have to have our own equivalent of a central bank. We have to do our own monetary policy. Like these kinds of things all come into play because we need to keep the purchasing power of the currency stable. And if we're not doing it based on a reserve of dollars anymore, we have to be keeping it stable with respect to consumer prices. We have to have a consumer price index and manage the flow of spending, the amount of credit creation, all of that.
Right.
So we do have to kind of like take on all of those roles. And then once we're there, we can finally start to calibrate the basic income payout to, kind of the maximum amount that the economy can sustain while still allowing our monetary policy to maintain the stable purchasing power of the currency.
Right. This is what I was thinking, was at some point you will need to basically create the equivalent of a central bank, a currency manager. And of course, this is as you point out, the US dollar is managed fairly well already, and it is popular, and it shows kind of, again, we would ideally like to save ourselves the trouble, but this is a way in which it can be in the private sector. Do you see a possibility? I mean, in this world we live in of quantitative easing and, sort of what some people might perceive as reaching the limits of monetary policy, is there a world in which central banks themselves lead a push to introduce basic income as a way of using fiscal policy to take up the slack of monetary policy? Is there a world in which central banks take the initiative in that?
Well, you do already see central banks complaining about lack of fiscal support. So you're talking about reaching the limits of fiscal policy. So there's limits in one direction, and then there's limits in the other direction. Right now, we're kind of hitting the limits of what traditional monetary stimulus can do, what traditional monetary easing or expansionary monetary policy can do. Basic income can help pull us back from that limit. There are things central banks are allowed to do and things they're not allowed to do. Right now, they're not allowed to print money and hand it out to people. That's typically what we would think of as something that's handled on the fiscal policy side. That the government would spend money and hand it out to people, and then the central bank would just adjust its monetary policy to accommodate whatever the fiscal authority is doing.
Recent, I'm not sure, but like what the answer to this is, but in recent past, during recessions, when governments are coming up with stimulus policies, and sometimes that has involved cash transfers in order to do that, is that something that comes from the state then? Do central banks tend to just be hands off and be like, well, we're taking dictates from the state, or do people in those institutions actually come to policymakers and say, we need an extra stimulus here?
The central bankers often do say, hey, fiscal authority, we need more fiscal stimulus in order to do monetary policy properly. Yeah.
That's what I'm interested in, because I do kind of wonder if there is at somewhere in the world central bankers today who are going to be like, maybe we should have a basic income. But I don't know. But it's something I'm wondering about.
Yeah, I think that would be nice, because they don't usually explicitly say basic income. They just say fiscal support. And I think there's still this sense, even among central bankers, that, certain forms of fiscal support, deficit spending, that kind of stuff, it's appropriate in the context of recessions, kind of counter-cyclical fiscal policy. They're not thinking of, ongoing government spending as perhaps something that could smooth over the cycle altogether or end the business cycle, that kind of thing, the way I kind of think about it.
Yeah. Yeah, they're definitely not talking about that. Not yet. So do you have any sense of kind of like, with this interesting Andrew Yang phenomenon, like, do you have any kind of goalposts or timelines that you're looking at in terms of like, well, when am I going to really start pushing this Project Gresham idea further? Do you have anything like that?
Yeah, right now what I'm doing is I'm actually putting together a book proposal. I'm going to be writing a book about basic income in general. I think, one of the big things that the basic income, movement, as it were, is missing is it's missing economists and it's missing economic theory. So I feel like my mission in life is to get economists on board with some of the stuff that I'm thinking about. Now, as far as Gresham goes, it could end up being the case that someone looks at the idea and says, oh, I want to, fund that. I happen to have a lot of money and I want to, help make this happen. So Gresham is something that's there. It is a system that's basically fully designed. We've built a kind of proof of concept prototype where you can create an account and you see, your account balance ticking upward as the basic, and it's a continuous basic income, and then you can send money to the other accounts and that kind of thing. But it's not, it's not real money. It's not even real fake money. It's fake money. Yeah, but Gresham is ready for whenever we need it. And I think a big part of, even getting credibility for the idea of Gresham is, building credibility for myself, showing people that, I actually do know how these things work, at least to some extent. It can be hard because there's a lot of cryptocurrency people out there, there's a lot of cryptocurrency stuff out there that, if you look at it too deeply, it really just doesn't make any sense. But if you don't look at it too deeply, you can just trust what everyone else is saying that it doesn't make sense. And then my thing looks kind of like one of those things. So, I don't blame people for looking at Gresham and thinking it's this crackpot thing. And it's even possible that it's that the fact that I've created I've designed this system has somewhat detracted from my credibility when I talk about basic income in general or monetary theory or economics or anything like that.
That's an interesting observation. I confess I had a similar reaction when I first heard of it, because I'm just so used to the deluge of alternative currency systems. And it wasn't until I sort of started learning more about the economics behind basic income that I learned to actually understand the difference. So I think you have the right approach writing this book, and I very much look forward to reading it.
Great. Yeah. Maybe I'll have you review it ahead
Nice.
of time. Yeah.
Nice. Just to summarize, like what is your complaint with the cryptocurrency advocates? What do they not seeing? What are they getting wrong? Because there's a lot of talk about this. Oh, it's the future of money. Like, it's exciting.
It's not.
Money is physical, digital. No?
So first of all, money is all digital already for the most part, whether it's fiat currency or cryptocurrency, whatever. Like digital, of course it's all digital. The future is digital. The past is digital. We've been digital for a while. But cryptocurrency, it has a few problems. I think a lot of the problems stem from the idea that we can have money without the institutions. Without someone making the promises, doing the policy that helps keep the purchasing power stable. So I think that's kind of where it stems from. That's kind of why we went down this folly of cryptocurrency in the first place. And then cryptocurrency itself has problems on the economic side, and it has problems on the technological side. Blockchain is a broken technology. It is a distributed database that is slow. And not just slow in terms of amount of stuff it can get done. It's it's computationally designed to be slower than you'd ever want any kind of money system to be. So blockchain is broken. There's a book that I recommend for anyone who wants to understand the technology of blockchain, really understand it. It's called Designing Data-Intensive Applications by Martin Kleppman. It's not a book about blockchain. It's a book about database technology. But you can see where blockchain fits in and the problem that blockchain is trying to solve and that kind of thing. There's no problem that blockchain solves that can't be solved using a conventional distributed database orders of magnitude faster, more efficiently. So that's the technological side of things. The technology is just broken. And then the economic side of things is all the stuff that we were just talking about. Cryptocurrency people don't understand what money is. And the design of cryptocurrency, it's designed in such a way that you can tell that the people who designed it do not understand what money is. They emphasize money being a store of value, but lots of things can be a store of value, right? Your house can be a store of value. A painting can be a store of value, right? What's special about money is that it's a standard thing. Of course, it is a store of value, but I like to say that money, at least these little tokens, money is the thing you spend, not the thing you save. If you want to save money, you're not actually saving money. You're saving some other asset that's expected to provide a positive return. If you've got something that you think of as money that's increasing in value over time, then it's not money anymore. Yet all these Bitcoin people expect their tokens to increase in value over time. Okay, you're not talking about money anymore at that point. That's not what that is. So maybe there's a role for that, and kind of there's a role for gold as an investment asset or something like that. But it's not the future of money. It's the future of maybe it's the future of something, but it's not the future of money. So there's this book. A Market Theory of Money by John Hicks, and I really like the way that he talks about money in this book. Perry Mehrling assigned a few chapters from this book in his money and banking course on Coursera. But this, when people ask me the cryptocurrency question, the two books that I recommend are this book and the database book. So this book for the why cryptocurrency isn't money and why the economics of cryptocurrency are broken, and then the database book for why the technology of cryptocurrency is broken.
Nice. As a rough sort of heuristic, I mean, is it accurate to kind of say that cryptocurrency is almost like a digital gold-based or commodity money-based system in which there's a kind of artificial scarcity of money if you're going to try to use that as money? you're it's it's um, it's unnecessarily limiting to in terms of like monetary policy and managing the currency.
Yeah, yeah, I think that's right. And like we had to overcome these deficiencies in gold when we were using gold as our standard. There's a reason why we didn't just use gold coins all the time, and why we used other instruments that were, we built this entire credit superstructure on top of gold. If we wanted to use Bitcoin in the same way, we could build a credit superstructure on top of Bitcoin, and then we're just trading IOUs for Bitcoin, and then eventually it graduates into a fiat currency the way gold did. But like then you end up in the same place where you started. Yeah.
Right. Glad to get all of your takes on this. Anything in particular that you didn't think we covered, or any other concerns you have?
I'm sure I'll think of something later. So we'll do another one of these.
We'll do another one of these. Yeah. Awesome.
Yeah.
Okay. Always nice
right.
talking to you. Thanks.
Yep. Thanks, Derek.